a pretty big drop, and it obviously risen a lot last week. Yeah, 13% going to come down to that 50-day line or worse.
We have this on leaderboard. I don't think we've made any decision yet on whether to trim our three-quarter position, but absolutely watching this very closely like a hawk, because we are kind of at that rubber hits the road moment where is the stock going to break its change its character? So far, we do like this nice bounce off the 50-day moving average, and we still actually have a pretty decent profit cushion, if I'm not mistaken, right, Ken? I think we were, headed into the earnings up about 20 to 22%. Is that right? Yeah, our cost is around $70 a share, and that includes three quarters of a single position. So that meant that we were putting in close to 9 to 10% of the model portfolio and leaderboard into Shop. So thank you for that, guys. We'll keep an eye on it. Here's the weekly chart also too. It's very important to watch that weekly, because you can see that, okay, well, in one day following the CPI, we've given up all of last week's gains, but we're also still holding that 10-week line, which has come up to a very important psychological price level, which would be 80. If you did a 1 for 10 reverse split, that would be at 800, which is kind of like, well, the key levels for these other big mega cap techs, whether it's 1,000, 1,200, 2,000, whatnot. Just think of these 80s, 90s, 100s, 60s, 70s also as key numbers for these other large cap names.